Ever wondered if you could invest in cryptocurrency with limited funds? The answer is a resounding yes. Welcome to the world of budget crypto investing, a realm where accessibility meets potential profitability. You might be thinking that the world of cryptocurrency is a playground for the rich and affluent. But that's a myth we're here to bust. It's not about how much you have, but how smartly you invest. You see, with a little bit of knowledge, a pinch of strategy, and a dollop of discipline, you can turn your pocket change into a robust crypto portfolio. Whether you're a student, a retiree, or someone just testing the waters, the crypto market has room for everyone. The beauty of cryptocurrency is that it's decentralized, which means it's open to all. Investing in cryptocurrency on a budget is not only possible, but it can also be highly rewarding if done right. Before you dive into the world of crypto, it's crucial to set clear investment goals and establish a budget. Now, disciplined financial planning is the backbone of successful investing, and it's no different with crypto. Think about why you want to invest. Are you looking for long-term growth, a bit of extra income, or perhaps you're just intrigued by the technology behind it all? Whatever your reason, it's important to define it. Next, establish a budget. This isn't just about how much money you're willing to put into crypto, but also about how much you're willing to lose. Remember, the crypto market can be volatile. And while there's potential for high returns, there's also a risk of loss. So be realistic. Only invest what you can afford to lose. This way, you're not just protecting your financial well-being, but also setting yourself up for a less stressful investment journey. Remember, the key to successful budget investing is disciplined financial planning and smart risk management. One simple yet effective strategy for budget crypto investing is dollar cost averaging, or DCA. This approach is all about consistency and discipline. It involves investing a fixed amount into a particular cryptocurrency on a regular schedule, regardless of its current price. The beauty of dollar cost averaging is its simplicity. It doesn't require you to predict market trends or time your investments perfectly. Instead, it's a methodical approach that focuses on long-term growth and accumulation. Let's break it down. Suppose you've decided to invest $100 in Bitcoin every month. Some months, when Bitcoin's price is high, your $100 might not buy you much. But other months, when the price is lower, that same $100 will get you more Bitcoin. Over time, this can average out the cost of your investments, hence the term dollar cost averaging. One of the main advantages of DCA is its ability to mitigate the impact of market volatility. Cryptocurrency prices can swing dramatically in a short period, which can be nerve-wracking for investors. But with DCA, you're less exposed to these short-term fluctuations. Instead, you're focusing on accumulating assets over the long term, which can smooth out the peaks and valleys of market price swings. Moreover, DCA is a particularly useful strategy for those on a budget. It doesn't require a large upfront investment. You can start with whatever amount you're comfortable with and increase your investment over time as your financial situation allows. However, like any investment strategy, DCA isn't foolproof. It's still crucial to do your research and choose a cryptocurrency that you believe has long-term potential. And remember, all investments carry risk, and it's important to only invest what you can afford to lose. Dollar cost averaging is a practical and disciplined approach to budget cryptocurrency investing. It allows you to gradually build your crypto portfolio, irrespective of short-term price fluctuations, and can potentially lead to substantial returns over time. By investing a fixed amount regularly, you can mitigate the impact of market volatility and potentially increase your returns over time. It's a strategy that champions patience and consistency, two key factors in successful investing. Another budget-friendly strategy is fractional investing and betting on low-cost cryptocurrencies. Now, what does this mean? Well, let's dive in. You see, cryptocurrencies are digital assets, and the beauty of this digital nature is that they can be divided into tiny fractions. So, instead of buying a whole Bitcoin, which could be a significant investment, you can buy a fraction of it. This approach is what we call fractional investing. It allows you to get your feet wet without needing a ton of capital. Moreover, it opens the door to diversification, letting you spread your limited funds across a variety of cryptocurrencies to mitigate risk. But wait a minute. When we talk about diversification, it doesn't mean buying a fraction of every cryptocurrency you come across. This is where the second part of our strategy comes into play, looking for low-cost or undervalued cryptocurrencies. There's a universe of cryptocurrencies out there beyond the well-known giants like Bitcoin and Ethereum. Numerous low-cost cryptocurrencies, often referred to as altcoins, are waiting to be discovered. Some of these might be undervalued, possessing strong growth potential. They could be newer projects solving unique problems, or established ones that are under the radar. However, this is not to say that every low-cost cryptocurrency is a hidden gem. This is where thorough research and due diligence become crucial. It's essential to understand the project behind the cryptocurrency, its utility, the team, and its growth potential. Remember, in the world of cryptocurrency, information is power. The more you know about a project, the better equipped you'll be to make informed decisions. This is particularly true when you're operating on a budget, because every penny counts. So start exploring, start researching. Look at community discussions, white papers, and recent news about the project. Don't shy away from asking questions. With fractional investing and smart picks, your limited funds can go a long way in the crypto market. Opening. A key aspect of budget investing is minimizing fees and expenses. Just as a ship's captain navigates through treacherous waters, a savvy investor must skillfully steer clear of the hidden costs that can eat into profit margins. So let's dive into how you can reduce these expenses. Firstly, choosing the right trading platform is crucial. Just like department stores, each platform has its own pricing strategies. Some charge per transaction, while some have a percentage-based fee. Others might offer free trades but sneak in costs elsewhere. Be sure to compare these platforms, not just by their shiny interfaces, but by the fees they charge. Remember, even a small difference in fees can add up to a significant amount over time. Secondly, avoid making unnecessary transactions. Every time you buy or sell a cryptocurrency, you may incur transaction fees. If you're frequently jumping in and out of positions, these costs can quickly add up. Instead, consider a buy and hold strategy. This approach involves purchasing a cryptocurrency and holding onto it for the long term, regardless of short-term market fluctuations. Not only does this reduce transaction costs, but it also helps to mitigate the risk of making impulsive decisions based on temporary market volatility. Next, consider utilizing budget-friendly investment tools. Some platforms offer features like price alerts that can help you avoid chasing after prices, and instead make strategic decisions at optimal times. Others provide educational resources that can sharpen your investing skills without costing a dime. Finally, be aware of the cost of moving cryptocurrencies between wallets or exchanges. While it might seem like a minor detail, these costs can add up, especially if you're making frequent transfers. As a rule of thumb, try to minimize unnecessary movements of your crypto assets. Closing. By keeping fees and expenses to a minimum, you can maximize your investment returns. Remember, every penny saved is a penny earned. And in the world of cryptocurrency investing, those pennies can turn into a substantial sum over time. So, keep your eyes on the prize and your costs in check. Now let's talk about diversifying your crypto portfolio. Diversification is a key strategy in minimizing risk and maximizing potential returns, even when investing on a budget. Picture your portfolio as a well-balanced meal. You wouldn't want to fill your plate with only one type of food, right? The same principle applies to your investments. A diversified portfolio will contain a mix of different cryptocurrencies, each offering its unique blend of risk and reward. Consider including a variety of asset classes in your portfolio. These might range from more established coins like Bitcoin and Ethereum to smaller promising tokens. You might also want to explore alternative investment strategies such as staking or participating in DeFi protocols. Remember, the goal is to strike a balance. You don't want your portfolio to be overly dependent on the performance of a single asset. In the world of investing, it's always wise to hedge your bets. A diversified portfolio can help you manage risk and potentially increase your overall returns. So, are you ready to start your budget crypto investing journey? Today, we've covered a wide range of strategies that can help you maximize your returns with minimal capital. We've discussed the importance of setting realistic investment goals and sticking to your budget. We've explored the potential of dollar-cost averaging and fractional investing, as well as the opportunities presented by low-cost cryptocurrencies. We've also touched on ways to minimize your fees and expenses, and the value of building a diversified portfolio. Now it's your turn to take control of your financial future. Start small, do your research, and remember, investing is not a sprint, but a marathon. Patience, discipline, and long-term thinking are your best allies in this journey. Remember, with patience, discipline, and smart strategies, you can maximize your returns in the crypto market, even with limited funds. Happy investing!